Hey guys, All in Crypto here, and welcome back, ladies and gents, for another YouTube video. Hopefully, you've all had a fantastic Friday so far. Today, we're going to be diving into our daily cryptocurrency market update. We're going to be looking at the technicals for Bitcoin. We really focus on Bitcoin in these updates just because it is just such an important driver of the crypto market. In fact, it is the driver. If Bitcoin decides it wants to have a bad day, your altcoins are going with it. Still very much that tide that rises and sinks all ships, ships being the altcoins. So we're going to be going over the technicals. We're going to start on the smaller time frames, look at the 1 hourly. We're not going to dive much deeper than that. No point, I don't think, looking at the 5 minute. And I'm also going to be issuing a little bit of caution here because there's quite a lot of contradictory. This should, to me, seems like it should be an easy short, but I don't think it is going to be that. And in actual fact, what happened yesterday where you saw this huge wick down here and then a massive buyback having smashed through the lower resistance sort of support level within this range, you know, that has me a little bit wary because this sort of 2800 level, or sorry, 28,700 level has actually been defended rather well. However, you know, on the contrary to that, you know, this market does look like it does want to push down, and we ultimately think that we are going to get to sort of that 23, 24K range. So we will be getting into all the technicals. We're going to be talking about JPMorgan that have essentially came out and said that they have a sort of fair value for Bitcoin at 38K, and that they think that crypto trumps real estate as a preferred alternative asset class. Now, JP Morgan and the cryptocurrency market have got a very interesting history because Jamie Dimon, the chap that you see in front of you here, has essentially come out and I think in 2017 he said he would fire anybody that even held something like Bitcoin. And now it's a real testimony to how we've seen the institutional sector turn in favor of the cryptocurrency market. So we're going over what they're sort of talking about here. They're also talking about the fact they're not actually seeing VC funds really dry up as of yet, even though we saw a huge collapse within the TERRA ecosystem, which was predominantly VC backed. You know, and that's also a huge reason why it crashed in the kind of catastrophic manner that it did, because they're going to pull money out left, right, and center, and of course leave retail holding the bag. So let's get into it all, guys. Market isn't doing a lot. We did see a spill yesterday. But it was very quickly bought up. And I really don't like it when people that do TA on crypto just show you a chart. Now, people that are trading this, they'll understand a chart like this. But to simplify everything down, really for the past while now, Bitcoin has just been trading in this range here. And it's been, you know, very much neither up or downsided. And it's actually been defended pretty magnificently at the lower band here. Now, there's a few, when I say this should be an obvious short, when you look at this, to me, and our overall view, and I'll very quickly demonstrate that again. Well, apologies, guys. Our overall view is essentially that we are going to see lower prices for Bitcoin. You know, you guys know we're looking at this 200-week moving average, and we're also looking at the lower bands here, and we're saying, look, very likely to me that you're going to get there. But we haven't seen any kind of a relief yet. And people are kind of anticipating some sort of a relief that hasn't yet shown up. But, you know, ultimately, I'm happy with. In fact, for me, a perfect trade set would be if we do get that relief, that would be a good short down to these lower bands. But we may not get it. And where Bitcoin currently is, when I say it's an obvious short, you know, if you look at the structure that you're in, there's quite a lot going on. Not only have we got this range that any kind of a break out of it, I think is going to be done with momentum. And I thought yesterday could have been it. But you're also within this range, you've got a kind of descending capping resistance line that you're struggling to break. And any kind of breaks really are just deviations to the downside and will be shorted. And you've got traders just trading. You can see it's like clockwork with traders, guys that trade ranges. These wicks are people just taking their profits off the table, and then in actual fact, in many cases, taking the other side of the trade. But I do think, if you look at this, this is sort of a descending triangle that you've got going on. You can also look at this in a number of ways. You know, lots of people calling for this as a kind of squeeze to the downside and a kind of bull flag or bear flag. Sorry, I do think that it's almost becoming too much of an obvious short. And I'm still expecting volatility. Ultimately, I don't think you should bet against the trend. I think picking up longs here is more risky than it is shorting. However, for me to get aggressive in a position, I am not interested in trading really any kind of significant size within this range. I want to see some sort of clear break and sustained break, not like just what we had yesterday. And the fact that we saw this wick here was extremely interesting. I will drop down to the 5 minute. I know I said I wasn't going to, but just for people that are interested. You know, we saw an absolute spill here to the downside. And I think people were getting extremely aggressive. And I can't help but feel like this was almost maybe exchange driven and they were trying to catch people's stop losses and stop them out. Because market makers are a real thing and they do, you know, I'm sure there's some funny business that takes place there. But the thing that really worried me about this in terms of getting aggressively short here was just how quickly this was bought up. I mean, it was bought up, you know, pretty much instantly, guys. It was nice to see actually that was the case, but it's worrying. You know, if you look at this as a wick, it was bought up very fast. So our overall bias is just be cautious if you're trading this. I'm personally to get in on any big size, looking for a break. And we do have shorts on altcoins, but I think, you know, that's going to be dependent on Bitcoin. If Bitcoin starts to pump here, your altcoin market's going with it. It's very simple. So just be extremely careful out there, certainly whilst we're in this range. But you have been consolidating, I think, for nearly 12, 13 days now. Any kind of a break is going to come with momentum. And to me, it's signaling that it wants to go down. However, what I think it's looking like it wants to do and what the market actually does is very different. And you only need, given the kind of low volume that it has, you only need a real buyer or seller to step in, and you're going to get that break, and then that's going to be followed up by retail and traders. Traders, more importantly, will jump on the back end of that and drive it. This is a very trader-driven market, and as somebody that's trading it daily, I can speak and in touch with some serious traders. I can speak from a sort of authority point on that. So let's get into the JPMorgan news. I retweeted a couple things on my Twitter. JPMorgan bullish on Bitcoin and crypto. Convenient how all of a sudden that's become the case. That's me rambling on about the corrupt political systems that we currently have and how they're outdated. Anyway, Justin, JPMorgan says Bitcoin and crypto is now their preferred alternative asset class. JPMorgan, our blockchain could potentially be the bridge that connects DeFi with institutional investors. So not only are JPMorgan, and it's quite almost self-promotionary that they've come out and said this, given the fact that they have their blockchain and they're trialing it at the moment for collateral settlements in after hours. You know, when we say that blockchain is a real technological revolution, it really is. I mean, cryptocurrencies is really the wrong word to call this tech, because many of them are not currencies and have never, you know, that's never been really what they were all about. Smart contract protocols, for example, like ETHEREUM, like ADA, like Solana, you know, you name it. They're really more, in my opinion, operating systems that you can really, you know, the possibilities for what you can do with them is endless. And in the same way that we've seen previous tech revolutions, again, we say this all the time, just like the internet, just like the PC revolution, just like even the motoring industry, the railroad industry, these are all techs that have essentially now become intertwined with our life. And I think blockchain's on a similar kind of path that it's very early on. And that's why I'm ultimately a massive crypto bull. But short term, I think to deny the economic conditions that we're currently under is foolish. And in actual fact, it's been a big mistake that I've personally made in 2021. We didn't take into account the fact, or we didn't take a number of things into account. One of the big ones was just how progressive monetary policy was from March 2020. That was never going to last. And that was really one of the main sustainers of why we had such a bull market and why Bitcoin went from 3 to 69K. You know, it was because of the monetary stimulus. That's been taken away now and is actually going very regressive, whereas it was once progressive. So JPMorgan, so they're saying that crypto trumps real estate and is their preferred alternative asset class. Bitcoin, which traded below 30K Wednesday afternoon, has a fair value of 38K according to the bank. Digital assets have replaced real estate at JPMorgan's preferred alternative asset class, the bank said in report Wednesday. Public markets have already priced in significant recession risks, and digital assets have repriced following the collapse of TERRA UST, according to JPMorgan analysis. An algorithmic stablecoin designed to maintain a one-to-one peg with the US dollar, UST traded around 9 cents Wednesday afternoon. A potential lagged repricing keeps us more cautious on private equities, private debt, and real estate over the coming quarters. analysis wrote. We thus replace real estate with digital assets as our preferred alternative asset class, along with hedge funds. The analyst fair value of Bitcoin remained unchanged at roughly 38k, implying significant upside for the digital assets from here. So Bitcoin right now, and we'll get rid of all the draws here. A move up to 28k, ladies and gentlemen. And this is why I'm saying be very cautious here. Because it seems like too much of an obvious short at this point, and that's when markets love to go against you. So a push up to 28k exactly, guys, is going to put you around about 31%. I could actually see that being some sort of a move, certainly if the equity market, which actually did quite well yesterday, wants to rally. And if we continue to see a sort of dollar weakness, people take their eye off the dollar, which had a significant pullback. Ultimately, think the dollar's going higher. I think if you look at the FX market and how it's kind of situated and what's going on in it, it supports dollar strength. Certainly, you know, we're seeing that with the likes of Great Britain, had a higher inflation rate than the actual dollar did. And that's has a lot to do with the dollar and what the Fed are doing. Anyway, we'll continue to read. So it's a significant move up if they are correct, but that doesn't mean there's not more downside before it. And remember, be very cautious about JPMorgan because, yes, they do get some things right. They're a huge financial force. However, you know, they're going to have their vested interests and reasons for saying this. And certainly if they're looking, they're going to, of course, they're going to come out and say it's going to go higher if they're looking at it as a preferred asset class to real estate, which means they're getting involved in it. Bitcoin was trading at around 29,700 at 4 p.m. ET on Wednesday. Through the Terra crash has soured sentiment among investors. JPMorgan analysts said there has been relatively limited spillover to the other stablecoins and DeFi more broadly. Venture capital funding in the crypto space will likely be a key metric to watch. They added, of the $25 billion of venture capital funding so far in 2022, nearly $4 billion came after Terra's crash. If VC funding dries up from here as a result of the loss of confidence from the collapse of Terra's ecosystem, then a return to long winter of 2018 to 2019 would look more likely for crypto markets. Analysts wrote, thus far, there is little evidence that VC funding is drying up post Terra's crash. So we've often said this, and then talks about them, you know, looking at opportunities. We've often said this, that the Terra crash was not just damaging for Terra, but crypto in general. It puts a huge stain on the cryptocurrency market because it was a crash really of epic proportion, and it wasn't a, you know, it was a pretty negative thing to happen across the board. And it puts a lot of spotlight on DeFi, on stable coins, and these are all key components of the cryptocurrency market, and in actual fact, areas of real excitement. Of course, JPMorgan trolls blockchain for collateral settlements in after-hours trading. What we've achieved is a frictionless transfer of collateral assets on an instantaneous basis, stated JPMorgan global head of trading services. So another example that a big institution is looking to actually not only use blockchain technology, but use it as a way to bridge the traditional financial world with the DeFi sector, which is coming, by the way, ladies and gentlemen. I think there's going to be a lot of regulation surrounding that. Remember, we do actually have regulations on the way. The executive order was signed a while ago. I'm not sure how far into that order we actually are, but I know it was only 180 days at start. So that will be coming this year and could be a pivotal moment for the entire crypto space. And both the order from the US and the UK cited that they wanted to be the leaders and maintain a sort of leading role in this new and exciting technology. US Fed Vice Chairs say a digital dollar would take 5 years to launch. Not 100% convinced on that. Potentially, we don't know. But, you know, with what happened with Luna again, stable coins or digital dollars, which is what most stable coins are, or try to be, are going to come under huge regulation. And you know, I think the US and other institutions have a kind of vested interest in being the dominant stable coin, and I actually think they'll succeed in that without attacking anything. So we'll see what today brings. Very cautious shorting here, just simply because it's almost too obvious, this short. But at the same time, technically, this looks like it wants to roll. but I could definitely see some sort of a rally. Just given, I mean, this is a real base that Bitcoin has made for itself, and whether that will hold or not is really going to be a test of time. All I've got for you in this one, guys, if you've enjoyed this content, always a like is appreciated. So is a comment. Lots of people asking for my Twitter handle. My Twitter handle is @RealAllInCrypto. And you can see in my bio, we've not got a great deal of followers, which is a shame because we do put some really good content on here. But yeah, all I've got for you in this video, that's enough for the self-promotion. I'll love and leave you guys. Have a fantastic Friday, and I'll catch you all in the next YouTube video. Thanks a lot for watching, guys.